Hello, this is Ronnie. I'm back here with a clip taken from a long video that I just finished to record for my subscribers. I'm leaving the option for my services at 50% off for the first year open, and I'll be providing further details after the clip ends. So if you're interested, please stay on. I'll be talking to you again at the end of the clip. I would like you also to read carefully the disclaimer that I'm going to put up now, so that it is clear to you before you go ahead and watch the video. This is just a standard thing. Okay, that's the monthly scale, log scale of spot gold, and big things could be coming to this market. Yes, very big things. I'm going to review 4 charts concerning the precious metals, and this chart is, if you like, on its own in terms of the set of subdivisions that I'm using, because it doesn't have the same breakdown of what I suspect has transpired here as a fourth wave. Here I'm not very sure where the fourth wave ended. I am working with this concept that we have a fourth wave here. I'm not sure where it ended. It makes more sense that it probably ended here, while you will see in the other charts that I will show you in a minute, the fourth wave ended in 2020, somewhere here. Okay, so there is some divergence in the way the fourth wave built up here in gold. It's important because longer term, of course, it's going to influence the wave count. If we are right and it's going to explode above 2,100 in due course, and it's going to rally, of course, it's going to have a slightly different wave count than in silver and the other two indices, the HUI and the XAU. Okay. Take this into account. We are still in a preparation mode here for the big breakout that is surely going to come at some point. The forces are building up for a massive rally. That's the way I see it. We either finish the fourth wave here, in which case we have ultra bullish 1, 2, 1, potentially 2 behind us. I'm beginning to go for a 3 of 3, which is going to rock the foundations of the metals industry. Absolutely, is going to rock the foundation completely. Even if the fourth wave ended here, which is not very likely, setting the stage for 1, 2, 3, even that 1, 2, 3 would already be very powerful. Okay, you don't lose sight, of course, of the fact that we could be in an inverse head and shoulders. Not very precise. We break through that, the shoulder here would be minuscule, of course, comparing it to what we have seen here, but you get the point. It's going to be momentous event once we get the weekly, monthly close running up above 2100, 2150. That'll be big deal. Okay, so that is the best reading on the weekly. I'm going to show you here the daily, and it looks like we are potentially set to run higher. No guarantees, I could be wrong. On the daily, this is a 1, 2, 3, 4, 5 ABC potentially behind us. The C was much shorter than the A, unless I missed something here, and the A ended somewhere here. Okay, but let's proceed with what appears to be a build-up of an impulse wave. Okay, so it ran to the limit of this downsloping channel, and it's looking to me like it's scored a 1, 2, 3, 4, 5. So that's potentially wave 1. Okay, potentially wave 1 of what is going to unfold as a huge rally. If that is correct, we should see it backing off potentially to 1913 or so. Okay, at which point you might consider going long. That will coincide with the 200 moving average right here, and this is the 21. They're probably going to flatten together right here, serving as an excellent support. Let me show you. You see that is essentially the idea. You have seen here 1, 2, 3, 4, 5. I could be wrong, and that is actually a 1, 2, 1, 2, 3, 4, which means it will continue to rally and will not come back to recheck support here. Okay, but any short-term setback or drifting lower that looks corrective, sort of reluctant decline, if you like, is probably an excellent chance to get in. Now, if you're still hesitating, don't do anything. Never act against your instinct. If you're not very sure, you're not very happy with what you see, don't do anything. Just wait until you just can't wait anymore, and your instinct will say jump, and that will probably be what could clinch the deal for you if that happens the way I'm showing you. Yeah, that's one, that's an A, B, C. 2, or that's an A, that's a B, and nevertheless it will go much higher in a C. Okay, that will nevertheless be showing a continuation of the rally, even if it is just an A, B, C. Yeah, it's not going to stop here. Okay, so that's gold. We can look at the short term, but it's not going to vary much from what I've just told you. You see, that looks like a fourth wave to me. So the build up here, which we can't be 100% sure where exactly it ended, that delivered a 1, 2 somewhere here. That's a 1, 2, 3, 4 looks okay to me, and then a 1, 2, 3, 4, 5 probably finished here. If that's correct, we are going to see trailing sideways to down, as I explained on this is 2-hour scale, and that's where your opportunity will show up. Okay, so that's spot gold. Now here's silver. Now look, it's really interesting. In the case of silver, I think that on the monthly we have reasonably good possibility to take the end of a fourth wave right here. Now if that's correct, coming down probably traced here, silver trace an ABC, A, B, C, like that. Okay, if I'm right, that is 1, that could be 2. We are looking at another tiny 1, 2 probably behind us. If that is correct, I can't be certain, but if that is correct, silver is going to leave this zone and it's going to go to a completely different level, way beyond 52, way beyond 52, way beyond the top that was registered here. Let's move to the weekly scale. We'll take a look. So that could be our 1, that's 2. Remember, running up here we could have registered another 1 too. There is another thing that is very interesting when you spend a bit of time looking at this chart. Another thing pops up. You probably guessed what I want to say. It's rather obvious. Do you see that? Shoulder, head, shoulder. That is inverse head and shoulders that shows potential for $8 to $9 jump. Once it crosses the neckline, we get a firm close right here and start running. That's, let's say, $9. You put it on 26. Yes, that takes you to 35. If my math is correct, that takes you to 35, and that could basically be our third wave on this scale. So it's going to clear the resistance right here, and it's going to run. Yes. So that is the weekly scale, and as you can see, here's my 1, 2, 3, 4, 5, that's my 1. If my reading is correct, that's an ABC behind us. If that's correct, the rally that started from here will have further room to run to the upside. It will be more, will get more and more momentum, and it will start breaking down all overhead resistance. Right here, I'm showing two possible alternatives that are not going to really delay the big jump by months, but there could be several possible readings here. We might have one more jump here, as you can see, and then the correction second wave, or we might have seen the top of this first surge and we could go sideways and then break down a bit. If you break down towards 2320, it's an opportunity to buy. Again, if you're not happy with that, don't do anything. You might want to wait, in fact, until the whole huge structure here of the inverse head and shoulders is behind us. That's totally up to you. It's totally up to you what you want to do. You can wait for a weekly close about 26.5, 27. Then there is a fair chance that the momentum and the structure is screaming buy longer term. Okay, so that's the situation in silver. Now here's the chart of the gold and silver sector index. That's XAU. That's the monthly. Do you remember that idea of the fourth wave? In both, in the case of silver, it corresponds to the drop that took this one right here, and then in the case of silver, we have a 1-2. Do you remember? We have a 1-2, and we have a 1-2, and the same thing is showing up here. Okay, so for now, ignore this. Yes, this will clarify. The whole thing will clarify over time. It's going to take a long time. What we need to focus on really at this point in time is to see if we get a recovery strong enough to pull this index above 170. Now, given that that is the monthly, let's think in terms of 6 months. I would say in 6 months, 6 months to 8 months, it should hover above 170. Then we know that this wave count is most likely confirmed with a 1-2, 1-2. Now, it's very possible that it won't take 8 months. Look, when it wants to run, it can run. Here's 2.5 months. Look at this. This huge run. There could be something like this exploding from this level. Definitely. Yes. So the stronger it is, if we get a replay of something like that, the wave can be ultra clear. Ultra clear. There will be zero doubt, okay, that we are really in a fabulous historical move. Now that's XAU, that's the monthly. Let's break to the weekly. And that's what I see. That's 1, that's 2, 1, 2, 3, 4, 5. Here's 1. Okay, we have a gap. Markets love to close gaps. That's probably going to jump over there. That's an ABC behind us. If so, the march to higher ground has begun. Okay, still got a lot of work. Let's see the daily quickly. And we have here the ABC behind us. And that could be a 1, 2, 3, 4, 5. Okay, if that's correct, it'll go sideways for a few days before continuing with its march to higher level. So that's XAU. Let's see the next one. That's the gold bags index. That's the HUI. That's the quarterly. And again, the story of a possible fourth wave that corresponds with what I've shown you in the case of silver, in the case of XAU now, would peg the end of a possible fourth wave right here with a fairly squeezed in A, B, C, D, E. You see, rather this is a rather short version of something that maybe has been going on here in a longer version as an A, B, C, D, E. I just don't know. With time, I will have clarification as to which one is the more likely. This is the quarterly. Okay, and now we're going to jump to the monthly. Now, if the fourth wave or the triangle ended here, that is setting up the stage of taking this as a 1-2, and you already know that's another 1-2. Okay, it is not impossible to argue that this is an A, B, C, D, and that may be the end of the E leg. Yeah, well, we don't know. We'll have to be patient, and with time, as I said, that will clarify. And we're looking again at an ABC behind us, big ABC. Now, that normally calls for very big move up. Why? Because the scale of the correction tells you, hints at the scale of the next move that relates to that correction. You understand? This serves as a base for what? For the next pattern. But the next pattern is not going to be measured in weeks. It is going to be measured on a scale that the preceding big pattern took time to trace. You see this? It's many months. You can count. You can go through and count. It's more than a year. It's about a year and 4, year and 5 months, maybe more. But the idea is that what is coming up now is going to relate at least to that, and it could very well might be relating to something even bigger, but this is already good enough. Okay, so if we are done with the second wave, which I think is quite likely, no guarantee there, but quite likely, we will know once it clears 280 and it runs above this level. So the scene is set for expanding the range here. Now this is the daily of HUI, with this being 1, 2, 3, 4, 5. Okay, and spend 2-3 days, maybe even more, 5 days, come down, and that will be our 1. Okay, that'll be our 2, and some consolidation, normal stuff, and then we go up. Okay, 1, 2, 3, 4, 5, and that probably will take us somewhere there, and then correction before it's going to go panicky a bit. My website, the homepage is right here. It's Wave Mastery, www.wavemastery.com. Yeah, wavemastery in one word.com. That takes you to the homepage. You can scroll down, look through some things that I've written here, some recommendations from past users and current users, and that is essentially the offer currently open only to first-time subscribers. Okay, so there is the daily service, daily videos that are preceded by a trial, so you can take the trial for 1 week, and at the end of that, if you're happy, you do nothing, you go on to the plan of half price. Essentially 79 presents half price of the normal price, and that will be good for 1 year. That means 12 payments of 79. If you want to watch just the weekend videos, then you go for this one, and it does give you access to the weekend videos, and I often also insert a video as a bonus midweek, just to keep you on track, to see a little bit where things are moving, because sometimes 1 week of full price action is a lot, and the wave count can change, especially if you're a short-term trader. You really want to know what's happening. So that is essentially the situation. If you decide to go, for example, for the daily videos, you click here. It takes you to the page where it explains to you. You should read that. It explains to you what is covered, etc., etc. If you like what you read, you click here, subscribe. It takes you to PayPal, because my paying system is through PayPal, and you pay through PayPal. You can see you have the trial at $9.99. That's for the first 7 days. As I said, if you like what you see, do nothing. It just goes automatically. If you don't like, you can cancel. Or if you don't know how to cancel, or you have any doubt, you have any question, you can write to me, of course. Once you go through and you pay, you come back, PayPal will send you back to my website to fill in your profile details, choose your login, and once you do that, you will be led automatically to the page with the links to the various videos classified by date. If at any point in time in this process you have a problem, things are not going as I'm describing to you right now, all you have to do is just contact me and I'll help you out. That is essentially it. So you'll have 1 week to look at things. I would like to just spend a minute about the website itself. I have written here a few articles. Is this website for me? You can go through that one. Psychology and trading, trading and the arts, why join? Yes, each of these articles could perhaps help you to see how to relate to my website, but there is no substitute, in my opinion, to actually take a trial. You know, you take a trial, and I want to say another thing. You take a trial and you can't make up your mind. You want more time to think. Fine, I understand that. Then you cancel, but then you're not allowed to take another trial. Please, I want to be very clear about that. There are people who abuse this, and it's really not right. You're not allowed to take more than one trial, okay? A trial is a trial. But if you're interested, after you take a trial, you're interested to come back, you can still benefit from the low price for the next full year. But you have to write to me, and then I will send you a special link without a trial. And if you join, then you're going to go immediately onto the reduced price plan for 12 months. Okay? If you take another trial after you took already one, I am going to have to cancel that and refund you. And if you do that 2 or 3 times, I'm just going to blacklist you, because there are people who have been doing it, and I'm afraid this is really absolutely not right. This is subscribe here. Use subscription. Once you are logged in, you will see this one highlighting you daily service videos or weekend service videos. Yeah, it will show which one you really have the right to access. The daily service videos, to be very clear, they cover the weekend service videos, okay? So you don't have to subscribe to both. The daily covers everything I do. The weekend, of course, is more selective. Now, I have here resources. There are chart galleries right here, chart 1, 2, 3. There are plenty of charts here that give you an idea how I go about subdividing various market action here. I covered a lot of markets, and you can see there is history here that could be very interesting for you to just go through. Let's see, platinum, for example. Yes, that's 1973 to 1978. If you click right on top where it shows you the hand, the chart opens up big. You can print it if you like. Here's an example of platinum, April 1980. 1, 2, 3, 4, 5, and then the huge correction that followed after that. So there is plenty for you, whichever market you're interested in, the financials, commodities, precious metals, etc. Okay, so that's chart galleries. Then useful links, as the name implies. Yes, recommended reading list. You have a long list of books here that I've read over the years that I found very interesting. Of course, I have many more books that I would like to add. It's just a question of time. I don't always have time to update this one. But the books that you find here did help me in the beginning, and still. The information here is very valuable in these books. For example, Kroll. I don't know how many of you heard about Stanley Kroll. Stanley Kroll was a really imaginative fellow trader that wrote very well about his own trading and in trading in general. I learned a lot from these books. And of course, if you haven't heard about Reminiscence of a Stock Operator, you should get this book and read it. You will not regret. This is a book that most traders, I think, have come across and read. It is very interesting. And as you go down the list, you will see if there are things that are of interest to you. Of course, go ahead, get them. Some of them are even available online for free as a PDF. Check that. If you have questions about that, you can even contact me. Here's the contact us, and you put your name. Please make sure you give me the right email address. Message, simple maths, submit, I get it, you'll hear from me. I'm based in Belgium, so if you write to me from Australia or from the US and I'm having my rest, do not be surprised if I don't react quickly, okay? Normally within a day you will have a reply from me. I check my email fairly regularly. So that's about it. Hope to see you visiting my website. Hope to see you taking a trial. If you have any questions, again, don't hesitate. Get in touch with me, and wishing you a great trading week. Bye now.